Welcome, everybody. How are you all doing? This is Alberto Alvarado. Welcome to our webinar WoW Trades. Let's begin. Well, a little bit about me. If this is not the first time that you're assisting to the webinar, you realize that the importance of knowing the background of the one that you are lending your ears, that you're listening in this very wild arena that is called the financial markets is very important. My name is Alberto Alvarado. I was born in Mexico. I'm Mexican. I broadcast from Mexico City. I have more than 10 years of experience trading the markets. I started in 2005. I lost my first live account in less than a month. But after that, I realized that the financial markets were exactly what I wanted to dedicate my life to. So I decided to take seriously my self-education, and more or less in 2007, I started grasping the first rewards of my efforts just to see again my accounts evaporate in the volatility of the crisis of 2008. Then at that moment, I had to take a decision to continue or to leave it. I decided to continue at a very high personal cost. And in order to continue, I realized that after the crisis of 2008, what I thought that was my edge was not complete, so I decided to integrate to my edge emotional and creative elements for intuition, imagination, creativity, along with rational ones like the traditional fundamental analysis and technical analysis. And what you see here is my own reading using all those tools. In the fundamental side, I use traditional tools. I don't have any kind of a special economic or mathematics degree. So I only keep up with the news, with what they mean. I try to read a lot the news, the analysis of the fundamentals. And in the technical side, I use very traditional and the free tools like MACD, RSI, stochastics, Bollinger Band. With the standardized parameters, I am not interested in tweaking every time to make my indicator to fit the trading and economic conditions. I rather than my reading to be the one that changes and not my tools. Okay. For the ones that haven't subscribed to my YouTube channel, I strongly suggest you to do so. In YouTube, you type IIBB's Trading Room channel. This shows up, and you click subscribe. Don't worry, when you receive the recording of this webinar in your email, you will excuse me. You will be able to look at my YouTube channel and subscribe. Today's menu, okay? Bullish United States dollar fundamentals. If you're really interested in the trading world, you should be already aware what I am talking about, or more or less what I will be talking about in the next minutes. It's going to be basically on yesterday's Mrs. Yellen words, and today the fundamental data that we had that is confirming the United States dollar bullishness. We will try to make a reading of that joined to the political side in the United States, because this is getting really, really interesting. And we're going to review very specific setups in the New Zealand dollar, United States dollar, the Kiwi, the Euro dollar, and the Mexican peso. These three, I have been talking about them lately in my other deliveries through binary.com. Sorry about that. I had like these little things of wood in my finger that itched, so I just removed it. Sorry. So let's begin with that. Well, first of all, before I start talking about the trading setups that I see. Basically, the United States economy is showing a very good performance so far. Something that maybe POTUS is not very likely to accept because it goes against what he has been sustaining during all his presidential career. But this gives Donald Trump a smaller room to move. Why? When the markets actually start seeing that something, a policy, the result of a combination of policies, have good results, if you dare to touch them, they panic. In other words, when something is not broken, don't fix it. The results that we have received overall today and the speech yesterday of Mrs. Yellen is telling us and confirming us precisely that the legacy, whether Donald Trump wants to accept it or not, the legacy, the overall legacy in the economic side of Barack Obama is delivering and still delivering good results even after he left the president's, the White House. And the markets will be very resistant and will show a lot of opposition to any kind of wild changes because the markets like stability, and overall when stability comes with good results, it's very difficult that you convince the economic participants that if you change something, you're not going to spoil it all. So this is getting really interesting. Donald Trump has been hyping lately the super ultra new tax reform in the next weeks, but he needs to consider all this data because usually these kind of tax reforms that he wants to apply are in an economy in weakness, not in strength. So politically, Donald Trump has been trumping into a lot of problems, a lot of realizing that a lot of his propositions really are tough to apply. And with this, I believe that the markets are going to push him to slow it down a little bit and just follow what has been done so far that has shown good results. When it stops showing good results, maybe it is the time to look to tweak or to change something. So for the ones that like to understand that economics cannot be unattached to politics, this is something that's going to be very interesting. And the markets are sending a strong signal to the in this case to this guy, to POTUS, that you know what, if things are working, we are not going to precisely applaud and accept that you want to change everything just because you think it's better. Because you can discuss ideas, but you cannot discuss results. The results are there. So yeah, I believe that the markets are considering that after these numbers, the things are going to continue pretty much the same, including maybe even this renegotiation of NAFTA. Because the markets won't like that then, if you move something in NAFTA, maybe this will simply disappear, these kind of benefits. So it's going to be very interesting. So let's jump precisely into the charts. This is the euro-dollar chart. This is the weekly chart. This is a triangle that's been broken before the beginning of this year. As you can see here, more or less in December, this triangle was broken. I've been talking about this triangle, sorry, in other webinar deliveries through binary.com. I commented that here it was exactly when Donald Trump won the election, and we had the sudden spike, that it was nonsense, and immediately started moving down, and it is stabilized more or less at 105. This is recently, this is the chart as it looks right now. I just waited for the last minute to take this snapshot. After 30 minutes ago, we had the fundamental news deliveries by the United States. So, well, as you can see here, since before 2017, we have a breakout to the downside in euro dollar. Of course, this is showing bearishness on the euro dollar. This is not going to be pretty for the euro dollar in the next, because fundamentally we are more than no-brainer aligned to the bullish side on dollar. So this should continue moving down. The problem with this is that we still have this fear running, and this ghost of anti-EU and separatist parties in Europe, in France. But apparently, yeah, at least in France, apparently they want to make it to put a person that wants to promote to leave France to leave the EU. We need to still wait and see, because we need to remember that all the polls failed before Brexit, before Donald Trump, and this could be the same. And that is why I believe, and I've been commenting in other webinar deliveries through here, that the way to go in the euro dollar in the fundamental side is to the downside. And I was explaining that exactly if you put this distance here, you get to the party. This is where the euro is moving. So I believe that if any, why I'm telling you this information, if you're really willing to go long on euro, you need to be very careful. You will find opportunities to the upside and to the downside anywhere, anytime. But knowing when you're fighting the fundamental trend, it's very important. I will show you next why. This is the weekly chart, okay? This is the 4-hour chart. I've been commenting this triangle. This is a 4-hour chart. We had some days before this breakout, and I was commenting during these webinars. Just be aware, if you're going to go long here, you need to be very conservative in your take profit targets, very tight on your stop losses. When you're trading binary options, you need to be very, very conservative if you're playing a no-touch and touch binary options, etc. And this is why. We have this breakout. It retraced, it touched this line, and then sold off again. If you, for example, had decided to long here, and maybe you were having wishful thinking that this could go here, you needed to realize that you have a triangle in the weeklies broken since prior 2017. And here, you have, some days ago, a 4-hour triangle breakout to the downside. So, of course, the direction is to the downside. I've been saying that during these webinars. It just moved barely here. It was shy from this trend line, and look. This is just what happened today. And so this is why you should be always aware of the fundamental direction. In the case that you decide, for example, there were here a lot of bulls, as you can see, but they were very conservative on their take profit targets. And at the moment, maybe this could have gone against them. You should have closed this trade. Now you see why. If you had decided maybe to go long, wishing this price to get here, ignoring this and the weekly triangle, and this starts selling off, and you say, okay, let's move my stop loss from here to here, then it continues selling off. And then you say, okay, let's move again. Let's put it lower, and it goes low and low. And eventually you will have to take this loss. Because initially you should have been aware that the direction of this trade was to the downside. You will find bullish opportunities, yes, but you need to be very cautious. So now you see, having the context of what a market is doing is truly important. We've been analyzing that triangle in the weeklies, and we've been analyzing this triangle in the 4-hour. This is the power of selecting correctly the chartist patterns and to give them context. And that is what I try to do here. This is another trading setup that initially was wrong. The call that I did, I believe, was last week. It was initially wrong because I was expecting that after having, this is the weekly chart. This is the Kiwi. This is the weekly chart, okay? Or this is the dailies. No, this is the weekly chart. Some days ago, some weeks ago, we had this trend line breaking to the upside. So it could have been expected this to continue going higher, but this didn't happen. But knowing that the Kiwi broke during 2 weeks, this trend line, ignore this above one. This is a mistake. This is the lower one. During 2 weeks, it was broken to the upside. So it could be very, very obvious that once a market does this, it would like maybe to retrace, to retest what it was a resistance, and then to continue moving up. But this was before this fundamental news. So this breakout happened maybe before time, trying to anticipate some kind of weakness in the American dollar, in the American economy. And overall, I've been explaining to other fellow traders that I expected that maybe the New Zealand economy could have a boost because a lot of millionaires are moving there because they are rejecting, some of them, Donald Trump's approaches on different matters. And because the tensions between Russia and the United States, there is the misbelief that living in New Zealand brings some kind of shielding. That's a lie. But well, millionaires think that, and they started moving there. So that means a lot of money moving there. So maybe that is why this broke to the upside. But well, at the end, the market retraced and put the price just below. This is what happened between last week and today. But look again, when you decide on a trade, you need to look the daily, the weeklies, or even the monthlies to really have an idea what the market is doing, to really know exactly what your expectations could be in a certain trade. If you have a breakout, yes, this could have gone here, up to here. Yeah, but usually after having a breakout, you could have a retracement, so you need to be prepared for that. And sometimes it just not only retraces, but goes even below the line. Now that the United States economy is showing a huge performance, and we're having a no-brainer United States dollar bullishness, this gives a complete different sense to this breakout. This was a fake breakout. So, well, the market just dropped. This is the weeklies. This is how this looks in the daily. During 2 weeks, again, ignore this one, please. During 2 weeks, the price hovered here, and you can see it was retesting it, retesting it, retesting it. It finally made some kind of movement to the upside, but look, the volume was low. So yeah, the risks were that the market could retrace back this line and retest it. Ahead of the 0.74, it started selling off because here we have a dovish comment from the Royal Bank of New Zealand. So after having a breakout, maybe expecting the New Zealand central bank could be more hawkish because of more investment from foreign residents, and they were completely disappointed. They started selling off and selling off and selling off, and today it's continuing selling off. But look at this. This trend line comes from the weekly charts. So if you decided to go long here, you at least have to consider that, yeah, it could retrace to even to this level. So you needed to be aware of that. Because after having a breakout, the most likely thing is that this will go down. In my case, this was a personal mistake I made. I went long. My objective was 0.74. It was shy. because of the New Zealand central bank decision happened in another time zone that I am not awoke, that I'm not attending my computer, it sold off and my stop loss was hit. But I didn't have a stop loss here, because I knew that this potential thing could happen, that the market could retrace to retest this level. I really didn't expect that to happen, but in fact, it happened, and you need to be prepared for things that could happen, even if you think that they are not likely. So, and it was a good takeout of my stop loss because it continued selling off. If I had continued open, imagine saying, "Oh no, I will keep my trade open to the upside here." It sold off, yeah, but it will jump here. Yes, not necessarily. Even if this is a weekly line, you should have expected here huge support, huge, massive support. And what you had here, it was like hot, hot knife on butter. It simply went through the support, and then the price retested here, confirming it again as a resistance. And after today's United States economic fundamentals, it's pretty much impossible that this will see prices above 72 in the next days. If I had kept open this long trade here, I would be regretting not closing it here, or here, or here. Thanks all to having good support and resistances in the weekly charts. This is how this looks. This is the this is the hourly chart. Just look how beautiful this looks in the hourly chart. We had here being shy of the 0.74, and here was this dovish comments from the New Zealand central bank. It sold off. This is the weekly line, okay? Just look at this. It went below it. It retested it once. It went below this level. It retested it twice. It sold off even bigger. And then here, we have Ms. Yellen yesterday giving some bullish comments on interest rates. And here, the positive American good fundamentals. Look at this. That is why you need to look for daily and weekly trend lines. Maybe if you don't want to trade them, it's okay. If you're a really intraday trader that you are only opening binary options of 1 hour, 30 minutes, etc., it's okay. But you really need to be aware of these lines. Always. Look at this. I mean, this was not to the pip, but this happened because of a reason. Here and here. The reason is a weekly trend line. Okay. The third example is the Mexican peso. You know that since I'm Mexican, I follow this every time. I know this is not that very popular for people to trade it, but this has gained a lot of track after Donald Trump threatening the performance of the Mexican economy, etc., etc. So it's like a lot of people looking to the Mexican peso, looking for opportunities that are there because of the volatility. This is Donald Trump's election. This is the weekly chart, or the daily. This is the weekly chart. So this is Donald Trump's election. No, sorry, this is the weekly or the dailies? This should be, this is the weekly, yeah. This is November. And the market broke this line of this ascending triangle. It made it to the 22. And as Donald Trump was serving as president, the Mexican peso gained territory. I'm not going to explain again because we did that at that certain webinar here through binary.com. The reasons why I believe this happened. And apparently, all those reasons are being confirmed. But now we are facing again the real fundamental direction of the Mexican peso, that is bearish. If you have bearish sentiment on USD Mexican peso, you will see this continue moving up. As you can see, and it's even from before. This comes from 2008, the movement to the upside. But look, here since the beginning of 2014, look, it's been only going up and up and up and up, and this had a breakout. I initially suspected that the markets could retest the 20 or the 1950, but some days ago, I believe it was Fitch, some of these agencies that put the grades on the debt of the countries. This was saying that the Mexican economy should be warned that due to the massive internal debt that we manage here, we could have and face economic problems. And besides, Donald Trump uncertainty factor is not helping. So the real trend for the Mexican peso is to continue doing this. Dollar up and Mexican peso down. Overall now. Because now, as you can see, we have been testing this support. Let's move to the next chart. We have been testing this support at 2025, close to the 2020. We have here a double bottom in the this is the hourly chart. This low was violated, but at the end it made a retest here and jumped. This is yesterday, Yellen's words. We had a retracement that didn't make it below here. Actually, this low respected this low, and this is today. So the question was in the Mexican peso, what is going to be the next major support level? Will it be close to the 20? Will it be at 20? Or it will be at 19.50, the triangle I just showed you, that triangle level. But well, according to all the things, how they are aligning now, apparently this could mean the very bottom of the next big wave to the upside, at least to the 22. Why? Because there is nothing more beautiful in trading than having all the fundamentals aligned. You have negative fundamentals for Mexican economy, and you have positive fundamentals for American economy. So this is like a no-brainer trade. That doesn't mean that it's something that you just set and forget. No. But at least here, there are clear indications or where the major fundamental movement should go. It's the same thing in euro dollar. It's the same here in dollar Mexican peso. So if you haven't been watching lately the Mexican peso, maybe you should. Because as you can see, it can hold big, very big movements in one direction if you know where to enter. I'm not saying that this couldn't retrace again and maybe retest the 20 and then shoot up. This could happen. But I see, and I've been following the market, and I believe that it was trying to look for some kind of ground. And I believe that today's news gave them just that. I would like to thank everybody for showing up for this webinar. Remember that the objective of the information that I deliver here is to help you, to hand you what I believe is the best, the most reliable, and the most important, in this case, trend levels, trend lines, fundamental directions, etc. So you can make up your mind individually to fit it in your very own interest, because of course it's very different if you're trading binary options with a duration of 2 weeks, 3 weeks, than if you're trading 30 minutes binary options, or if you're using the margin trading for binary.com. It's very different. But at least you see the power of following the right compass. All these trend lines that I've been talking about them, I believe that 3 weeks, 4 weeks ago. So this is the power of this. If you really want to filter the noise, take those lines as references. Be patient, take your time, trying to find your timing that adjusts your interest, your time horizon, your account size, your interest in trading, and take your side, bullish or bearish. It's irrelevant. You can see even the very big movements in one direction. They have retracements, but the thing is, what fits you best? A quick retracement of 2-3 days, or you feel much more comfortable trading longer moves of 2, 3, 4, 5, 1 month, 3 months, and that's it. So I really want to believe that the information here could add value to your decision-making process. I would like to thank Shadis, as always, for recording, for bringing assistance here to the webinar, and all of you for visiting this. Remember that I expect you next week exactly for my next delivery in binary.com. If you haven't subscribed to my YouTube channel, my free YouTube channel, go there and subscribe. And remember that this is Alberto Alvarado. This is your webinar WoW Trades. Remember to trade safe, be safe, and bye-bye.